Hey everyone, hope everything is going well while the stock market crashes. I wanted to get into the volatility index, the VIX, the option market, and look at something that's really interesting. So for those of you that know, option pricing is usually based on a few aspects, but volatility is very important. There's also theta, there's few of the Greeks as well. And there's delta also. The volatility is very important. So if the volatility goes high, right, then the option price will go higher because of a high volatility. And today, a very interesting thing happened. It went over 100% up. And over the past few years, I've also discussed this, a lot of the hedge funds were going short vol. The short vol trade was very popular with these guys, and a lot of these guys decided to go along the XIV. And in some videos, I talked about how I'm short XIV, and I was getting hammered in my position for a long time. I don't think I broadcasted that. And today, after hours, I noticed, holy crap, it went down to 65 bucks. Okay, let me cover my short position. This is a good idea. And not at that point, I didn't even realize the volatility index went over 100%, which would be detrimental for the XIV. I would anticipate that the XIV would have gotten hammered before hours or during the market time when volatility went over 80%, 90%. But if you look at the prospectus of the XIV, it says that basically if you see a ridiculous move in volatility, like 80, 90, 100%, the XIV is basically going to go to zero. And me being stupid at that point, I didn't realize volatility went up that high today, or as high as like 80, 90%. And I bought back at like $44, which tomorrow it looks like is going to go back to zero. So I'm an idiot for doing that. I was right on shorting volatility. Not shorting, I mean shorting the XIV. That's only good. I only bought way less shares at 40 than when I started shorting. I shorted more than I bought. So that trade pretty much is going to come to a scratch. I could have made another $5,000–6,000 if I decided to wait a whole 12 hours, assuming that volatility doesn't contract tomorrow. I don't see that happening. And this is, in my opinion, really important. So if the XIV, as I believe, is going to be delisted tomorrow, now what contagion effects will it have for the rest of the market? What will it have for other ETFs as well? So this is just what I'm thinking in the back of my head. I don't know if other market participants are going to think like this. I believe the new Federal Reserve chairman is going to speak tomorrow, so you're probably going to have, once again, a lot of volatility. But at the end of the day, if the XIV gets delisted, you could see some more ugliness go on in the stock market. And then another lesson to note from this is make sure you don't put all your bags in one basket, because I was going on StockTwits, the trading website. A lot of there's some people that put half their portfolio in it. They put like $21,000 in the XIV, and that's basically going to go to zero. They wrote it up, and now they lost everything in that, or they most likely will lose everything in it, unless miraculously volatility contracts, like I mentioned before. The other important part is if you're trading options, right? I would never recommend to sell options naked unless you have the capital to back it up. And the reason why I say it is when you have a ridiculous volatility move like today, and most likely will continue for maybe the next day or so, you could lose a lot of money. I'll give you an example. A few years ago when volatility shot up to like the 18, 19, I sold a lot of volatility, a lot of options in the futures market, and I got a freaking margin call every single day. This was right before Trump got elected, right? And I got a margin call for like 3-4 straight days in a row, and then I panicked and I made some dumb mistakes at that point, right? I started shorting the market, and then I got burned, right? And we know that the market just went straight up until right now, basically. And the other thing is, like, I buy some options just to hedge my portfolio, like in the futures, right? I do sell options, but I make sure that if I sell an option, I buy an option, right? For these credit spreads and debit spreads, right? Out of the money. So what happened was I did buy this out of the money put. I'll give you an example. An 1870 March put in the S&P E-minis. All right, it was maybe $100, or maybe $200 at the time where I bought it. Like, as of right now, or like 15 minutes ago, I haven't checked this second, but it's like worth $1,500. It's ridiculous. Volatility is getting out of control, in my opinion, right? I just did it. Okay, what if we have one of these events, right? I always think, like, okay, right? Central bankers are nuts. We have Trump in office, right? Whether people like him or not, we're going to see volatility, right? And I want to protect myself just in case volatility goes up. And this is why it's just ridiculous. This is why I buy these options, just to protect myself from an adverse move. Because I do have one of my portfolios, it's just based on selling premium, right? But I need to protect myself. So I make sure that I buy more puts than do I sell, just in case you see something like this today. So that's just one important note for those individuals that ever want to sell options. Make sure you are hedged, and make sure that you have the capital to withstand crazy moves like today. And the other thing is, everyone was talking about bubbles, right? I used to talk about, hey, the economy is going to crash, it's going to crash, it's going to crash. You're going to see this bubble crash, this bubble crash. So the short vol bubble has bursted, right? And I mean, all these hedge funds, they were riding this for years and years and years. They thought that mean reversion would work. And finally, some of these guys got their hands slapped. And, this is what central bankers do. Create these hedge fund guys, some retail guys, to make bets, make a lot of bets, and they'll eventually get burned for that. And then Bitcoin was another one, in my opinion. But anyways, guys, let me know what you think. Do you see actually the market turning around? I kind of hope it turns around. I don't like seeing violent moves in the marketplace. But we shall see how it goes. Alright, guys. Thanks. Bye.